Hey everybody, Tom here. Welcome to a very special webinar I have tonight. I call this my 2025 stock market outlook. Glad to have you guys all hanging out with me here. Good evening. Good evening, good evening. Or good morning, depending on where you're coming from. I know some of you are around the other side of the pond, just waking up. Glad to see you. Happy New Year. Welcome to 2025. So I got quite a bit to share with you today. I'm going to get into my 2025 market outlook. We're going to take a look at the year in review very quickly on the big things: stocks, bonds, commodities, crypto. I'm going to say, Bitcoin and Ethereum and cryptocurrency as a whole, I'm going to save that conversation for next week. All right, because I will be. You'll find out soon enough. I got something pretty big happening about. I think it's Tuesday of next week, middle of next week. So we'll get that out to you when it's ready. Also, I want to share with you my favorite stocks for the year. I have an absolute all-time one. It's not a real stranger. Everybody's heard of it, but I want to share with you why, the big reason I like it coming out of the gate right now in January. And so to do that, I'm going to be using the money calendar. And I've got a gift for all of you too. So I'm going to show you that right now. It's kind of a before we begin. So once again, everybody, Happy New Year. Hope you had a great holiday season. We got a lot of really cool stuff happening with Gulfport Analytics this year. All right. It's nighttime. I might share a few things with you that I wasn't able to talk about in 2024. And I think you guys will be very happy with the way things are going to be moving into 2025. So, big thing, this session is being recorded, and I'm going to make sure it gets out to you tomorrow morning, along with a 25-page report, which is my 2025 stock market outlook, 25-page report in PDF. That'll be coming along with it too. So you will have that. Number two, I'm not selling you anything tonight, okay? I will talk about some stuff we're going to be doing during the year. Really, this is just to kind of wind you up and look at what I'm looking at. I want to share what I'm sharing with you, with all of you, in terms of my, really kind of want to say that 90-day to 1-year outlook of what's going on with the markets. So you guys all know where the chat button is. Feel free to chat with me. And if you got something I think that everybody needs to hear about, I'm going to put it up on the screen like I just did with Roy. Happy New Year to you, Roy. And Tony, and of course, Tony. And good evening from Albuquerque. All right. And Deborah, Happy New Year from Georgia. So we're going to get into a lot here today. So before I go any further, though, I got to put this up, this disclaimer. In fact, not only do I have to put it up, I need to put it up, meaning I need to put it big here. I'm not going to read this word by word. I never do. What I am going to do is tell you that if you want to read this word by word, you can do that with the pause button on the recording. So quickly, though, stock options and cryptos have large potential rewards, but also large potential risk. And number two, all right, myself and everyone that works with me at both Gulfport Analytics and Tom's Trading Room, all right, we are here to educate you on how it is we trade in the stock market, all right? We are not investment advisors. We do not give specific investment advice, all right? So part of that, the year of 2025 is going to be the year of transparency, because guess why? All right. I am now your publisher. I self-publish, right? So I'm excited about that. I'm going to share a little bit with you at the end of the session. All right. So for those of you that have dealt with, let's just say, customer service that just wasn't up to snuff, if you dealt with waiting for an alert that came out and by the time you got it, the market was closed, if you dealt with stuff like that, and I could go through a long list of it, you don't have to deal with that anymore, right? And I'm going to tell you a little bit more why when we go down the road here. Let me educate you on some stuff here first. So let's talk about 2024 and where I see things going in 2025. So first of all, S&P put in, somewhere around 26% for 2024. In fact, when you look at what the S&P did over the last 2 years, I want to say the 2-year return was somewhere north of around 60%. It's impressive. It's almost too impressive. It actually scares me a little that the S&P 500 made those kind of moves in the last 2 years. But you have to also look at this. If I turn this chart upside down, you know what that means? That means the US dollar lost that much money. All right. You take a look at what's happened just in the last few years with all the stimulus money that got put out. And then you couple that on top of supply chain issues, COVID, which we had to deal with, and God knows what else. The US dollar just it was stretched and it was printed. And housing prices doubled over the last 4 years. I could just go on and on. But since we're talking about 2025, I'm going to stop right there for a moment. Here's my question. Will the Trump inauguration be a sell the news event? All right, let's put it up there where you can see it. All right, here's the chart. And I say, are we running up? Are we getting a run up into inauguration? And then will the volatility kick in? Or perhaps what happened in December? Remember, December was one of the worst months of the entire year for 2024. You go back and I look at a couple of months, April was a pullback month. July was a pullback month and into August. And December was a pullback month. But December wasn't anything near what we've seen in the past. Is this a continuation? Today was an interesting day. We jumped up, but then we closed off the highs. And are we going to rotate down again? Perhaps. I think that we're going to know things in a couple of weeks, whether we have a buy the rumor, sell the news, or whether we have a sell the rumor, buy the inauguration, right? So sell the certification, buy the inauguration. Or as they buy the certification, sell the inauguration. We'll see. All right, let's continue on. So the bond market, and these are weekly charts I'm sharing with you. The bond market had what I like to call a seesaw year. Started on a high note when TLT was trading near 100. By the time we got to April, we were down to 87.50. That was a target that we were looking at, if you remember, going into the coming out of the first quarter. We saw a target of 87.50. Then we rallied all the way back to 100. Didn't see that coming. All right. Other than the fact that, yes, we kept talking about rate cuts. We didn't get the kind of rate cuts we thought we were going to get. And that's why you see the bond market back down now below 87.50. Where do we go from here? All right. So we ended on a down note. We've hit new multi-year lows. I think we could continue to trend lower, especially if the Trump administration comes in and actually is able to enact just some of the promises they've made since November 5th. Could cause bonds to continue to go lower. Eventually, I think that's a bad thing for the stock market. Next, I'm going to move right into commodities. Take a look at USO. This is oil, right? This is not a pattern. It is not a pattern. Yeah, you might look at it and say, well, Tom, you've got some weekly consolidation that happened there into December, and we just broke above that. Yes, we did. We did break above that. But I would say 2/3 of the time, 3/4 of the time, all right, 75% of the time, I'm a seasonal guy. I use seasonal patterns. You all know this. Right now, we do not have a seasonal bull just yet for oil. Wait a month. I'll be talking about it then. All right. Next, let's move into gold. Now, I said this a few times. We rode this gold bull really well, all right, really well in 2024. But and we even, if you remember, we had targets right up there around the 240 to 250 area. We hit those targets. We actually hit them before the end of the year. Then we got the pullback. The pullback came down to around 235. I don't think the pullback's over yet. I think we're going to expect a continued pullback in gold. And if you look at 230, that seems to be the area. That's the bottom of this triangle that you see here. That seems to be the area that we're looking at in terms of where that base is going to be, right around 230. That's what I'm believing. And I believe this is one of the main reasons why we're going to see that pullback. And that is clearly the winning asset of 2024. I'm talking about Bitcoin. So gold really took off. If you take a look at gold, was up what, 30%? It was up 30%. I think Bitcoin was up 130%. I think Bitcoin did its 30% in January and February, and then it just kind of slid sideways. And the next time it made an all-time high was the night that Trump was elected president. Once the media called it, it was even before they called it. It was already starting to tick higher, and it ran up to 80,000 really quick. The next day ran up to, or next week it ran up to 90,000. We hit 104, was it last month? Pulled back to around 91, and today we were back at 102. We were back above 100, first time in about 3 weeks, I think, since mid-December. We were at 100, so obviously very bullish news for Bitcoin. Here's the thing about Bitcoin and Ethereum. I could sit here and talk for probably an hour about cryptocurrency, right? I don't have the time. So I am going to save this, and I'm going to go into this in detail next week. So keep an eye on your inboxes, because I really believe that Bitcoin, Ethereum, the entire cryptocurrency area, including crypto stocks, they all need their own voice. And so I'm going to give it to them next week. All right, so adding all of this up, you take a look at stocks, bullish. Bonds, really kind of bearish. We saw that. The US dollar is bullish. Oil will be bullish. I have bullish on here, but you got to wait a month. Gold, we're looking at continued bearishness. And of course, Bitcoin, we've got bullish. But then when you look on the right-hand side of the screen and you see my trend outlook for 2025 is bullish. Earnings outlook, at least for the first quarter, bullish, because it just, there was some optimism that happened after November 5th, and people went out and spent money. Especially, I think you're going to see the retailers are going to beat expectations when they start talking, but they won't start giving out their numbers until the end of the month, maybe the beginning of February. So now here's an interesting one. Typically when trend traders are bullish, contrarian traders are bearish. Contrarian traders were bearish in December, and if you hung out with me for any time in December, you would know that. We talked about the contrarian traders looking for pullbacks. They got them. Now the contrarian traders have flipped. They are now bullish. And the seasonal outlook, well, the seasonal outlook, at least into January, is bullish. In fact, if you look at January and March, part of February, but January, March looks very bullish. January has been a bullish month on the calendar now for, I want to say, almost 20 years. So almost 20 years. That includes the 2008, the 2007, 2008 debacle. So that's all wrapped up in there too, folks. All right. So let's talk about a little bit more long-term, and we're going to get into stocks now. So when I talk about long-term, I want to break down the 4-year cycle for a moment. So if you take a look at this chart now, which got a little smaller on your screen, you've got 4 years on that entire chart. These are average returns going back 100 years now? No, 75. 75 years. So The first year is, and we're talking about year 1, year 2, year 3, year 4 of a president being in office. We've just now flipped into year 1. We officially flip into year 1 on Martin Luther King Day, President's Day, Inauguration Day. That's the day we flip to year 1. But take a look at year 1. Going back 75 years, little less than 4% return on average. Year 2, a little bit more than 4% return on average. Why is year 1 typically less? Year 1 and 2 less than years 3 and 4? Well, because you got a new administration coming in, and new administrations have their own plans. And there were some folks that I listened to not too long ago on a meeting, and they said, with all these things that Trump wants to do, it sounds good, but when you have you have all 3 branches of government all on the same side, that actually causes a bit of volatility in the markets. So that's something we have to think about too. Year 2, kind of slogging along. Year 3, already we've got midterms out of the way, and now everyone's starting to concentrate on what? On getting reelected, right? So year 1 of the 4-year cycle, you typically get the worst returns on average. It doesn't mean there's no guarantee we're going to get bad returns this time, but I do think we're going to see some increased volatility here for at least coming into the first half of this year. Now, take that information and let's move forward a little more. So let's talk about sectors and stocks now that President Trump will be occupying the Oval Office again in 2025. Finance. We talked about financials, and my financial pick here was JP Morgan. It's up to 44% for 2024. It is a top pick. It's not the top pick, but it is a top pick in financials for 2025. Okay. If we were to take a look at where JP Morgan is right now, and I grabbed all this data at the end of the year, and so JP Morgan is trading just a little bit tad below where we are right now. So we're real close, right? So what are we looking for? Well, when you make 44% in 2024, when the overall market did about a 26%, that was almost a 2x. So if we see maybe a 4% return on average for the stock market, maybe we're lucky to pull out 8%. But keep that in mind. That's 8% is still good coming off a 44% year. Next, Exxon. Exxon was up 10.5% for 2024. And the term here is drill, baby, drill. You might wonder with Exxon whether or not this one really is going to have that get up and go kind of movement. What's going to happen if the price of oil comes down? Is that going to be good for Exxon? Is that going to be bad for Exxon? Again, what happens is when we pump more oil at whatever price, it adds more dollars, more gross margin dollars to this company's top and bottom line. Now, there's been some argument of whether oil is going to go down or oil is going to go up. And I do think eventually we're going to see the price of oil come down, the price of gas come down, because if Trump runs the same playbook he did his first time in office, then we should expect to see oil prices come down. But what about all the retooling that's supposed to be happening in Saudi Arabia? What about all the retooling that has to happen here? For the short term, I'd say the first 6 months, we might actually see the price of oil rise, and that's my expectation. But again, I don't really think we start kicking in the gear in that until, I want to say, February. Give Trump a month in office. Then I think we start to see oil prices slowly move higher into the summer months with demand. Then we'll peel off as more and more of these oil companies get online. All right. So that's my my look at what's going on with oil and energy. All right, next. How about Tesla? Up 70% for 2024. All right, ended the year at it was coming into the end of the year over $400 a share. Tesla since then had a bit of a pullback, and that might be because of earnings, and that might also be because of what happened some people think that what happened with the Cybertruck in Las Vegas had something to do with it, but obviously that's been proven that it wasn't the battery. And in fact, I think that gave Tesla a little bit of breathing room. Stock was down last week to around 370, right? Jumped back up again today. It finished off the day at 411. So it's come back well off those highs that we saw. In fact, the highs we saw were somewhere close to $470 a share. So I think Tesla is a fantastic pick if you're going to go down the tech area for 2025, especially with Elon Musk being so close to Donald Trump. All right, next, Coinbase. If Bitcoin truly is in the middle of Bitcoin summer, then companies like Coinbase should get a positive reaction to that. And now Coinbase was up 82% year to date. It still had not reached its all-time high, right, which was 400. Well, it's actually a little less than 400, but I have 400 as the target for 2025, and that's including the fees being cut and being shrunking a bit on Coinbase. And the reason why is because they are custodians to some big numbers, all right? And I'm talking about not only the whales that are out there and corporations, right? There's 60 some odd companies, folks, that are publicly traded companies that are holding Bitcoin as a store of value in line with the US dollar. MicroStrategy is number one. Tesla's up there. Coinbase is up there. And then there's a bunch of names that you might not know. I'm going to talk about those next week. But if you take a look at Coinbase, what's the negatives? The negatives are their profits are shrinking. Their percent profits are shrinking. But the good news is that their EPS should still remain high, go higher because of all the additional funds that are coming in, and their custodian. And now they're looking at right now. They're now pressing with a potential bank. I think Bank of New York Mellon is looking to do some custodian with them. And then you've got nation states that are also looking to Coinbase to store these in the vault, in the Coinbase vault. So a lot of good things for Coinbase, and I think this is an interesting pick if you're a Bitcoin fan. Quantum is a big one. And, when you look at Quantum, there's so many stocks that have just gone through the roof, smaller stocks. But one I think that's going to do well is IBM, because IBM is, by far, when we think of IBM, they've kind of been in the quantum business since Watson, before it was even called quantum stock. But they're definitely a player in quantum technology. They were up 41% for 2024. I can't believe IBM made that kind of a move in 2024, but I'm expecting new all-time highs coming into 2025 for IBM. It's a safe quantum play, right? So now I want to mention this for a moment. For those of you that moved in a little bit late, welcome to the program. You might have missed a few things. Don't worry, because I've got a 25-page report which has all of this information already there for you. Okay, so don't worry, you didn't miss anything. Now, let's move a little sideways here for a second. We talked about the year. Let's shrink that year into the first month of the year and the first quarter of the year. Now, what I like to do is I like to take those stocks that I just showed you, the year stocks. Now we're going to ring the bell. We've already rung the bell for 2025. And you look at these stocks and they're off. Who's going to come out of that gate faster than anyone else? It's a name that I haven't shared with you yet. It's my number one pick. It's a very popular stock, but I'm going to share with you why. And a lot of the why has to do with what you see on the screen. This is the money calendar. This is we have a new money calendar for those of you that are kind of seeing us, in here and haven't been in here for a while. Let me ask a quick question to all of you that are here live tonight. Who is here that, let's just say you haven't checked in with me in a few months? Now would be a fantastic time for you to let me know in the chat. If you're hanging out with me and you haven't checked in a few months, and you know what? I got another question for you. Do you like me doing these live events at night versus during the day when the markets are open. I'll leave that one for you too. So the money calendar, what I do is, oh boy, wait till you hear that. Here, I'll tell you a little secret. The money calendar is going to be available on Gulfport Analytics in the not too distant future. I'll let you know more about that when it happens. So that's a look at January right here. What you're looking at right now is a look at January. Okay, let me put it up there for you. Now, we had to retool this, and I'll let you know why. So here's January 6th over here. It's the first green one on the left-hand side. January 9th, the market's closed. So that immediately moves to white, all right? It moves to a market close for the Carter funeral. And so everything else, we had to go into overdrive and redo everything because that closing the market down kind of messes up everything with with what I do. But we had it all fixed going forward past the 9th. Everything's great. So yeah. So everything you see on this screen has to A, be an optionable stock. All right. B, it's got to be a popular stock, meaning it can't be something that has. I have very few 5-letter symbols in the money counter. I have probably a handful, but most of those 5-letter symbols don't even make it to this list. C, it has to have a 10-year pattern at the very least, where 90% of the pattern is moving in one direction or the other. It means that the 90% of the time it goes up during a certain time frame, or 90% of the time it goes down during a certain time frame. Okay? My big question is what happens after Inauguration Day, and that's where we get into a bit of volatility. But what I do is I take this calendar that you see here, and then I click on a day, and I drive myself into some details. Now, this is just some of the details that I look at. I'll look at symbols. I'll look at number of trades that I see around today's date. I look at the total percent return and the average percent return. Accuracy's got to be at least 90%, but sometimes we see some 100%ers that are out there. I'll then take that information and I'll click on a stock and I'll get some details on each pattern. This is an example of what a 10-year pattern would look like. If I were to start trading XYZ on today, let's say it's a 30-day pattern, then what I can do is I can look here and I can see that, in 2015, if I took the trade today in 30 days, that stock was up a little over 10%. There was a 20% drop in 2016, but every other year after that was profitable. The last 2 years over there, if you can't see them, 28% return, almost a 29% return in both of those years. And so this is the way we look at this, folks. All right. I'm not throwing darts at a wall. I'm not thinking. I'm not memeing. I'm not worrying. I'm not greeting. I'm not fearing. I find to be the most consistent as a trader, you have to take almost a robotic, unemotional approach. After that, look at the charts. Okay. I'm not a big fan of buying a money calendar bull when the entire chart's going down. If it's pulling back, that's fine. All right. And I'll look at the pullback and I'll look at the chart and I'll look at where the target price is and I'll look at where the target time is. So we like to do a time and price projection, right? Call it the tap. And so we're tapping in on these with the money calendar. And what I like to look for are 2-to-1 reward to risk ratios. That means that the upside reward, the distance on the upside, is got to be around twice the risk, right? So up here, I'm looking to take that much, and I'm looking to risk about that much. That's just on the stock. I haven't even talked about options. So that's how we do the money calendar. And from there, once I find something I like, then I look to see, well, if I don't want to buy the stock, how about an alternative? I'm going to give you an example of one. I was on a live stream earlier today, and I was talking to our members, and I was talking about booking.com. Yeah. Remember, booking.com. So, they took an overpriced line years ago. Stock's trading at a ridiculously high price. And it just has such a good money calendar pattern by it today. And I think it's about a 29, 30-day trade. But that's where the party ends. Because you know what? When I go to look for an alternative trade that's going to cost me, say, $500 or less via options, the options don't work. The options don't work for booking.com. Do you know why the options don't work for booking.com? Because they have a 10% spread between the bid and the offer. Yeah, the bid and the offer is 10% wide. I mean, you could sell your house, and that's a 6% commission. That's a 6% spread you pay to the real estate broker. And that's high. So between the high price, you look at the high price, and luckily now we have the ability to fractionalize stocks. So if you're looking at a stock that's, $4,000, $4,500, if you don't want to put 4,500 in the stock, you could put less. We're fractional shares. But to try to put an alternative trade on, I have to have liquidity. All right. I have to have some option liquidity. And the best way to determine option liquidity, folks, is not with open interest. It's not with option volume. I don't care who tells you that. It is the bid-ask spread, because that's the only thing there that is real. I don't know if that volume's real. I don't know if that open interest is real. And you might say, well, why would it not be real? Because it might be reported on this wrong day. It may not be reported accurately at the end of the day. They might tack it on the following day. The number one real thing that's happening with the markets real time is that bid-ask spread. I want it to be as thin as humanly possible. All right. Now we got that out of the way. Let's talk about what we do here. So I'm looking at, this is an example. All right. You got 200 calls up here. You got 180 calls. 180 calls, let's call those the at-the-monies. They're trading for $11. That's $1,100 for that call. But if I were to try to move some stuff around, maybe I could do a call spread. I could do a call spread for less than $500. And there's my $500 trade. If I put any option trade on, I'm looking to at least double that option's value in a small percentage move. And most likely I want to take half that trade off. I'll let the other half run. I'm going to get into a real case study with you here in a moment. And it is NVIDIA. So the winner's NVIDIA. And NVIDIA is not the winner because I think it's the coolest chip company alive. And NVIDIA is not the winner because their earnings are just out of control. All right. And it's not the winner because you might love the CEO. NVIDIA is the winner because it has setups. Okay. It has setups in January, February, and March. It has money counter setups in different areas of those 3 months. And when you add up the money calendar in January and the money calendar in February and the money calendar in March, you're getting you're getting some big moves. I basically came up with about a 30% move in the stock price between now and April. And now, if you take a money counter for January and you're looking at 30 days of time, that's 30 trading days. 30, 30, 30. You got to put a trade on that goes out to the end of April. So all the setups have positive power meters. That means that the trend just keeps getting better and better. All the setups have roughly 30 days of time, average gains of about 10% a month. Let's just use 30%. And guess what? The stock just broke the new all-time highs. In fact, it was trading above 150 after hours today. Here's the weekly chart of NVIDIA. Let me blow it up so you can all see it. There we go. Weekly chart's above, the post-market was above 150. My price and time projection looks like this. Price projection is 200 on NVIDIA, and that time projection is scheduled for May 1st. All right, based on everything we see, that's a pretty conservative price and time projection. So, what do you do with the information you have now? We could buy the stock today and we could sell it on May 1st or sometime in May. But maybe you're thinking 100 shares of stock, $150 a share, That's going to be 15 grand. All right. And, you know, it was a lot more before they split it 10 to 1. But still, maybe there's an alternative out there that gives you a better reward to risk ratio if indeed NVIDIA gets to 200. Because NVIDIA gets to 200, you got what? You got basically that's a 25, from 150 to 200 is a 30% return. All right, but what about a little bit more than a 30% return? But are there any options out there? Because again, you know my mantra, guys. Let me spell it out for you. Spot the opportunity. Looking at it now, right? What's step 2? Create the low risk trade or the alternative risk trade. Now, if I were going to create a trade with NVIDIA and I were going to buy the stock, I'd look at buying the stock at 150 and I'd look at 125 as a stop. I would have to have 25 points of downside protection to make 50 points of upside potential. That's a 2 to 1, right? 2 up 50 points, 1 down 25. But with options, what can we get? Let's take a look and see, because options are going to give us a different setup. Now, what I'm looking at here is, and I looked at all these options. You see the green ones on top? Those are the May 16th because they don't have April. Those are the May 16th. That's the third Friday in May, 175 calls. They're trading for about $10, right? 1010 is the, 1005 you could get. You probably get 1005 for them. But let's just call it 10. So if you bought those 175 calls for 10, you're spending $1,000 on the call option. That controls 100 shares of stock at what? 175. Stock's at 150 right now. It's got to go 25 points higher before it even hits your strike. Yes, I know, but we are looking at something other than statistical probability here. What we're looking at is we're looking at these options and we're saying to ourselves, but if it gets to 200, like the money counter projection says, then my $10 is going to be worth 25. If I paid 10 for something that's worth 25, I put 15 in my pocket. That's 150% return, but it's still $1,000. Here's an idea. Let's cut the risk to 500 and let's also increase the reward to risk ratio. Instead of it being 1.5 to 1, spending $1 to make $1.50, how about we spend $5? I'm sorry, I said spend $1. I meant spend $10 to make 15. How about spend $5 to make 20 as a max? Max risk, $5. Max reward, $20. All right, times 100. The spread, buying the lower strike calls for 175, selling the higher strike calls for 200. If we could do that for $5, we just bought a 25-point spread for $5. A 25-point spread, the most it can lose is 5. Now, here's the problem with this. If NVIDIA has a lackluster quarter, this is January, February, March, April, May. This is almost 5 months that we're looking at. It's 4.5 months. If it gets to 175 by May, the stock trader makes money, but we don't, right? So you got to realize that what are we losing? We're not putting up $15,000 for 100 shares of stock. We're putting up $500 for the right to buy 100 shares of stock and to be forced to sell 100 shares of stock. We have the right to buy it at 175, but we're forced to sell it at 200. I'll take that trade all day long. If somebody wants to force me to sell NVIDIA at 200, I'll take that all day long. This has a reward to risk ratio of 4 to 1. So any of you that might be a little concerned about that, or maybe you don't understand it, take 5 times 5. You take the distance between the strikes. So what's 200 minus 175? 25. 25 points, of which you pay 5, and the 20 is the profit potential that you could get. All right. So, is this a recommendation? No. This is a case study. All right. Recommendations we put out with specific buy orders and specific exits and such. But I wanted to share with you the number one stock I'm looking at, and we don't have to go all the way into the end of 2025. I'm looking at both long-term And I'm looking at that short-term 3 money calendars in a row, January, February, March. Now, there's probably a question out there that some of you might be asking about this. And that question might be, well, Tom, why don't I just buy the February strike, and then after it's done, I can buy the March strike, and after that's done, I can buy the April strike, and just roll this thing month after month. You could do that. But what happens if you get caught in one of these? Meaning that by the time expiration comes around, you're on the downside of that. The one thing I like about this trade is it gives you time to be right. All right. So that's what choosing something that's greater than 90 days does. It doesn't put you into investor mode, because that investor mode to me is someone that's buying and holding something for a year or longer. It puts you into a longer term trader mode. That's what it does for you. And this is what the trade looks like when you look at it on a risk graph. This is a risk graph. And what it's showing me is on the left-hand side, the price of NVIDIA, along with standard deviations. On the right-hand side, I see my maximum risk at 500. That means we need if we're at or below that number, we lose 500 per contract spread. The break even on this trade, in order to get the break even, you take the 5 points that you bought the spread for and you add it to the lower strike. So your break even, 180. Max reward is at 200 or greater. That's where you get the $2,000. Now there's a cap on this. If NVIDIA goes to 250, you still only get a 4-to-1. I can't believe I said that with a straight face. You still only get 4-to-1. All right. So to kind of summarize what we've talked about so far, right? What we talked about so far is that what we're talking about, folks, is a rules-based seasonality system. It gives us both price and time projections. And to me, you know, the part where the option trader really kind of goes astray is on the time side. Most people, and I'm going to include myself on this because we've all been through this. Everybody in this room has experienced this at least once in their life. You said, wow, options are just like a stock, but they're cheaper. No, we learned that the hard way. I did. I learned that the hard way back in 1987, okay, when the stock market crashed. I learned that I needed to be educated more. So this takes us from a novice, discretionary, I think it's going up or I think it's going down. You'll never hear those words out of my mouth. To maybe a news-based trader, but those people that use news-based numbers for the most part, when you're looking at year-over-year revenue, year-over-year earnings, you know, you're looking at a lot of fundamentals. When I hear the word fundamental, I have to that goes in with investment, investor. That's longer than a year. I use fundamentals, but I use them on my long-term stuff. Now, that moves me to technical trader. All right, so a technical trader is one that looks at a lot of different indicators, and they rely on certain indicators. But the problem is, if you use too many indicators, two things are going to happen. Number one, you're going to be definitely looking at indicators that are based on past numbers. All right, so most indicators are what I call lagging indicators. They lag the market. The second thing is, you got too many indicators on the screen, then you're going to get what's called analysis paralysis. You're not going to make a move when the time comes. So what seasonality does is it doesn't base lagging indicators. It gives you the best day to buy and the best day to sell based on seasonality. Yes, from the past, but we're talking about calendar days, which come back around. And so that way I know in the future when I want to actually start to buy and sell things. Now I can pair this up, and I'll give you guys a little look into the future. I am working with my team on adding true artificial intelligence to the money calendar. It's going to take us some time, but we're going to have it this year. We're going to have it later in 2025. I can't wait to share that with you. Okay. But when you have something that gives you average price and the time that you want to be out, that time element, that's exactly what the option trader needs. Okay. So as I kind of wrap this up, I want to share a couple things with you. And again, if you guys have questions or comments, feel free to throw them in here. As we get to the end of this, if you don't know it, and if you don't know it, you haven't read my emails, but I'm taking control of Gulfport Analytics this year. Took control of it. All right. Didn't like the way the publisher was dealing with me. Definitely didn't like the way they were dealing with you. For some of you who've been around with me for a long time, I want to thank you. I want to thank you for hanging in there, because all of a sudden, how many of you have seen the movie? I got to be real careful how I say this. How many of you seen the movie Shawshank Redemption? Who out there seen Shawshank? Now, I'm not talking about prison. I'm not talking about, what I'm talking about is when the narration, when Andy Dufresne goes through I'm not going to say it, the excrement, and comes out the other side free. That's what I feel like right now. That's what I feel like, because now I don't have to deal with the corporate BS that big publishers do. I don't have to deal with, I can sit here and just tell you guys, I was pounding my hand on the table about many things, and 99% of them were things that were related to you. All right, things that are related to you. So for 2025, guess what? More flexibility in how I can communicate. That means I can put alerts out whenever I want. Okay, so if you're a member of if you're a member of one of our stock services or an option service or crypto, heck, crypto things happen, sometimes at night, in the evening. I can put something out now because the office doesn't close when I'm in the office. So that's a good thing. The other thing too is that the publishers, for some reason, did not want me to offer you my scans. They did not want me to offer you my software. They did not want me to offer you the master classes that we do. I had 1 year that they tried it and they just gave up. And I think I know why. Because I think the only thing they were interested in was just continuing just to send emails. I don't want to do that. So we're still in the process of getting things going. Things are coming up online really fast. Here's a couple things that are happening, guys. First of all, for those of you that are members, so I invited everybody to this market outlook today for 2025. This isn't just a market outlook. This is a Gulfport outlook too. So here's what Gulfport outlook looks like for 2025. Trades are now going to come very, very fast. So when I see something I like, I'm going to put it into about 500 characters, 500 to 1,000 characters. So here's the other thing. I talk directly to you as a member of one of our premium services. You're getting it from me, all right? It doesn't mean that it goes from me to somebody at the publisher, to an editor, to a communication person, to finally the person they're the department head of sending out emails to you, because that process can take hours. My process takes seconds, right? From the time. Now it takes a little while for me to find these things. I can't find them in seconds, but when I do find something, when the bell goes off and I verify something, I put it down really quick. I'll zip you a picture. And you'll get a trade alert that looks just like this. All right. On this side, we send out trade alerts that look like this. So you'll see the entry. You'll see what it is. You'll see the type of option trade it is, what you're buying, what you're selling, what the debit is that we're looking at for a limit price. And that's what you get. And you don't have to go through the minutia of all this stuff to find the actual trade alert, because I had a problem with that. So we fixed it. So that's one thing. I have a delivery system called TAS, and TAS it stands for Trade Alert System. It will deliver directly alerts to my members in a matter of seconds. It'll update the portfolio regularly. So as we get positions in the open portfolio, you're going to see those, and you're going to see the exits when they happen. The other thing that's going to happen is everything that we close up will be added up to, and you'll be able to see that running track record. Now, here's the best part, and I'm sure you're going to love this. Alerts will not come with unnecessary research or ads. Okay, I couldn't stand, and I remember. Here's a question: how many of you had to been around for a while? I did a private trading retreat, and I did this at Delray Beach, at the Delray Marriott, right on Atlantic Avenue. Is there anybody in this room right now that happened to be at our Delray Beach private retreat? I want to say it was probably 2017 or 2018. It was a while ago. And see, the reason I bring this up is that I did a little cocktail reception and everybody was hanging out. And I had one guy come up to me and said, "Hey, man, that McDonald's trade, I put every dollar I had in it, and it was fantastic. And I made, he was waiting for me to congratulate him. I said, "What are you, crazy? Don't put all your money in one trade." I don't think I've heard from this guy since, because either he was not happy with my response or he did put all of his money into the wrong trade. And of course, that happens. Now, but the reason I'm bringing this up is because I had one of my members come to me and said, "Why am I getting emails? All right, in the actual premium publication, why am I getting emails to go to somebody else's webinar? Why am I getting emails about advertisements, especially ones that aren't even about you?" And I said, "I'm not the publisher. I'm not the publisher. I don't take your money. My job is to give my research over to the publisher, and then they get it to you." So that was, so guys, I was with Money Map Press for a number of years, and the deterioration over there really started after 2020. And then, of course, then I was traded like a blue chip to Legacy, which then had an issue, and they moved me on to another company, Alta, which then Alta decided that they had a little too much on their hands. So I could have walked. Okay, I could have absolutely walked away, and I got to tell you, I would have. I would have said, "I don't need to do this. I don't." I could have walked away. My wife was like, "You ready to retire?" But you know why I didn't? There's two reasons. Two reasons that I am here tonight and that I will continue to be here. Number one is there's some people that are on my research team that are not quite in the position that I'm in. And so, I kind of made a promise to them, and you are the other reason, because I did not want to leave you in some sort of a situation where you didn't know what was going to happen. And definitely didn't want you ending up with somebody else that may or may not have my belief system. Probably not. So I worked it out with my most recent publisher. I said, "Listen, I will continue to deliver to my group, but it's done my way. It's done my way with my stuff, with my delivery system, and I want you to be a part of it." And so they agreed. So that's where we are. And that's why I think things are going to be just so much better. This is going to be a smaller company, but I can tell you right now, and this is where I need my Tom's Trading Room folks, my old Optionetics group, to come in here, because I can tell you this till I'm blue in the face. But if there's anybody in here that knows me from Optionetics, if there's anybody in here that's been with me with my boutique educational firm, which is Tom's Trading Room, they can tell you how we ran our educational offering, because it was just us. There was no middleman. There was no high-rise offices. There was no fancy Christmas parties. It's funny, when I was with Money Map, I'd go into their offices in Baltimore, and I would ask some of the people there, "What do you know about trading?" And a lot of them didn't know anything. And, they were there to do the job. And I said, "What made you ultimately come with Money Map as a publisher?" "Oh, they throw the sickest parties, man." Like, really? And I mean, they threw some big parties. Now, the thing is that, all this stuff comes at a cost. So now, with Where we are now, folks, it's me and you and my team of programmers. All right. Yes, I got the best of the best. So we're a smaller team. When you are a member of our service and you want to talk to my team, you're talking to my team. You're not talking to the publisher or someone that doesn't know anything about trading. You're talking to us. And so, I want to make sure you know that. Our trade alerts in Gulfport are going to look like this. When you get into the member services, the actual members website, if you become a member, or if you're already a member, you know this. But if you come back to us and you're a member of one of our publications, you have access to our services, our members only website. The portfolio returns, you'll be able to see them on a monthly basis. You'll be able to see how we close up the month in each particular research service. We're also going to have software through Gulfport. That will be coming soon. Coming soon to Gulfport is we're going to have our own branded Gulfport software, Gulfport scans. And eventually I'm going to have the best of Tom's option tools integrated into those Gulfport scans via Hub. All right, so that is our plan for merging the software and merging the education and everything together. So I want to leave you with this. And by the way, thank you all for all the conversations. I got Gary here. I know Gary. I've known Gary for years. So I mean, there's several of you on here that I know your names. All right, Ike, I know you. Jim Bull. How would I not know Jim? I know Jim. I talked to Jim like last week. Penny, great to see you again. It's been a while. I mean, I know I've seen you, but anyway, so many of you that I know. All right. Let me just say this, because I did get a few questions about publications and about alert services, et cetera. It's interesting. In the mess that was 2024 in the publishing industry, me hopscotching from one publisher to another, guess what didn't happen? Some of you didn't move from Money Map to Legacy to Alta to Gulfport. Some of you got a little bit left behind. I'll let you know this too. I don't think anybody from Money Map got charged last year. So if you were a member last year, then you didn't get charged. Good for you. Some of you got dropped because your subscription expired. Some of you were on a lifetime plan. We know who you are, and I'm going to be dealing with each of these. And let me just say this: we have a plan for everybody. All right, we have a plan for everyone that was a past member, whether you were current or whether you were you dropped off. All right, whether you're part of Fast Fortune Club only or whether you took the whole kitchen sink. All right, I have stuff that we're going to be rolling out here very soon. In fact, that it's going to happen as early as next week. So I just want to leave you with this: if you are a member, all right, if you're already a member, then you should already be seeing our new trade alert system in action. So you've been getting the commentary and you've been getting the trade alerts. All right. If you're if you're either on our stock service, our option service, our cash flow service, or the crypto service, you should have been getting those already. Okay. If you are a member, great. Platform's coming online. If you're not a member, that's okay too. All right. We are going to be opening new memberships in this year. Until then, if you want to keep in touch with me, then go to gulfportanalytics.com and sign up for Patterns and Profits. Or you can go to patternsandprofits.com. That will move you to Gulfport Analytics, and you can sign up right there on the right-hand side for our Patterns and Profits newsletter. We're going to put that out, give you an idea. I'm going to put it out 3 or 4 days a week. It's going to go out about the same time every day, which is at market close. Right at 4 o'clock, you're going to get that email. All right. So I'm trying to make sure that I let you know when I'm sending you stuff. Okay. So patterns of profits, 4 o'clock. If you're on one of our trade trade recos or trade alert services, we do send those out via anytime during the week, but you'll know what it is because it's going to say trade alert right there in the header. All right. So Maggie Stock Cycle Trader is this is what I know. I don't want to say we because I didn't do it, but you should have been moved over from Fast Fortune Club. All right, that's our stock cycle trader. Now we're going to be making a couple of changes to each of these publications. In fact, I'll let you know more as they come out. They're all going to be good changes. Okay, they're all going to be good changes, and I'm excited to be sharing more and more with you. But there you have it. There's my outlook for 2025. Oh, one more thing. For those of you that came in a little bit late, I have a 25-page PDF that's going to be coming with this webinar recording. All right, should be out sometime tomorrow. I'm going to say tomorrow before noon. I don't know exactly when. Or you know what? Nope. We're going to make it tomorrow at 4 p.m. All right, you'll get it at 4 p.m. I want to make sure that you know that if it's not coming at 4 p.m., it ain't me. Okay. All right. I'm trying to make sure that you know when we're delivering you when it comes to education like this. Again, if it's a trade alert, it'll come at different times. But if it's education, if it's articles, if it's research, then you'll be getting that around 4 p.m. 3 to 4 days a week. All right. Am I forgetting anything? We're at the top of the hour. Glenn Reynolds, thank you. I'm looking forward to trading with you as well. Man, I'm telling you guys, I am giddy about what we got going on. I mean, just talking to the guys, we're real excited. And I think we're real excited because when we say we want to do something, it's not going to be that long before we put it into action. It doesn't have to go through committees. It doesn't have to go through roundtables. I mean, it's amazing. Some of the meetings I would walk into in the past, and there was 20 people sitting around a table trying to decide stuff. And I'd walk out of there like, wow, I could get this done in so fast and so efficient. And, for instance, this trade alert system, I was trying to push this to all 3 publishers over the last couple of years. They didn't want to do it because they were involved. It was something else. And so it was going to cause a problem with somebody else at the firm. So I just, I said, all right, you know what? It's you guys. Now it's me. Now I can do it. So, yeah. Ike, thank you so much. I appreciate the comments. And guys, you know what? Thank you all so much for this. I am really glad to be doing this, you. I mean, you know what? You want to know my team? It's really simple. The team you're going to be hearing from in 2025 or 2025, you've got, obviously I'm front and center. You're going to see me more than anybody else, but I got Jay Harris. Jay Harris is, he's my right-hand man. He's my seasonal guy. I've got Mike Wade, who does a lot of earnings stuff with us. I've got Joe Contes, who's my trend guy. Going to be bringing back Joe. I've got, I can't even think of them all. My money calendar programmer. I mean, this guy is an ace. His name is Miles Dunbar. Any of you ever heard of TradeStation? He's the guy that wrote the code for TradeStation. Back in the day when TradeStation wasn't a brokerage firm, it was a software analytics company. This was in the 1990s. That's how far back that we got to go. So, all right. And there you go. Drew, and folks, if you have any questions regarding publications, because Drew, you've got a good question here. I'm gonna pop it on the screen so everybody can see it. You say I've been a follower off and on for several years, bought the counter service last July. Do I get trade alerts? That depends on, again, I don't know exactly what you have, but if you talk to our support folks, they can definitely get you an answer on that. In fact, for those of you that are here, I'm going to give you that. It's member services at gulfportanalytics.com. I'm going to put it in here, portanalytics.com. You know, I know why people don't hit member services at gulfportanalytics.com that much. That's a long list of letters to type in. Member services at gulfportanalytics.com. Woo! How about support at tom.com? That would be better. Unfortunately, I don't own tom.com. I wasn't that, I didn't get to the internet domain trough early enough. Anyway, guys, thank you so much for all your comments. I hope you learned something today. Got a big report coming with the recording tomorrow. And be on the lookout. Next week, I'm going to go heavy into crypto. And I got something there you're definitely going to want to see. All right. So with that, I bid you good evening and hope to see you again here very soon. Thanks, everybody. Good night.